Hello and welcome to the Look Forward podcast from S&P Global. I'm Aries Poon from the Market Intelligence Division. I'm leading the analysis team for economics and country risk for Asia Pacific and Latin America. Today, I am your host. In today's rapidly shifting markets, success depends on anticipating what's next. And the professionals who excel are those who can spot emerging market trends before they fully materialize. The Look Forward podcast delivers exactly that insights to help you prepare for tomorrow's opportunities and challenges. We bring you expert perspectives on macroeconomic trends, capital markets, energy transition, and trade, with a sharp focus on what these developments mean for the decisions that will shape your tomorrow. This podcast connects you with S&P Global's Look Forward Council, bringing cutting-edge research on long-term trends and transformative market shifts. Together, we are committed to providing the forward-looking intelligence you need in order to navigate the uncertainty with confidence. Our guest today is Thea Fourie, also from Market Intelligence Division. She's leading the analysis team for Africa and the Middle East. Today, Thea and I will discuss three trends in the global payment landscape that will gain traction in 2026, with a focus on emerging and frontier markets. These three trends are the interoperability among domestic payment systems, 2, the development of a BRICS Plus alternative to existing international payment arrangements, and 3, a wider adoption of stablecoins. Now, let's talk about stablecoin first, as it is on many investors' minds of late. Thea, how big is the stablecoin market now?
Good morning, Aries from South Africa, and just thank you very much for this very kind invite. Looking forward to the discussion. Aries, yes, the stablecoin market has been growing quite significantly in recent years. A report that recently was released by Market Intelligence shows that the market capitalization of stablecoins will most likely reach 300 billion by the end of this year, which is up from 200 billion US dollars at the beginning of 2025 and only 5 billion US dollars in 2020. So you see this quite significant acceleration or growth in the stablecoin market. And I think what's also important is to mention that 99% of this stablecoins is pegged to the US dollar on a one-to-one basis, which means that if this market continues to grow and you have increased foreign demand from households as well as businesses, this will also prop up the demand for US dollars.
So why do stablecoins matter right now, especially for emerging and frontier markets?
Exciting times, Aries. And I want to start off by highlighting four things that we at Market Intelligence are very excited about. And the first is financial inclusion. It can be used as a measure of savings and hedging against inflation, cross-border payments, and then lastly, remittances. So if I start with financial inclusion, I think I'm a sub-Saharan African economist, and, there is a lot of the populations in sub-Saharan Africa, apologies, that still lives in very remote rural areas, right? But with fintech developments as well as mobile banking apps, many of them now today have access to financial services. And with stablecoin, they will have additional inclusion in the financial system, having access to US dollars, which is extremely interesting development, particularly in those countries where there's, for instance, FX regulations or controls, and also FX shortages, right? And also, I think that feeds into the possibility of using this as a tool of savings, but also inflation hedge, right? Over the period 2022 to 2024, we have seen the US dollar actually being very, very strong. And this had implications for local currencies for a lot of emerging markets as well as frontiers, which weakened to some extent against the US dollar. But also in countries, we had regulatory changes. For instance, in Nigeria, we had the free floating of the Naira exchange rate, which resulted in a sharp depreciation of this currency, feeding through to significant rises in inflation. I mean, also in Venezuela, where we're seeing some policy shifts and regulatory shifts, that's also impacting inflation. Now, individuals make use of stable coins to hedge against this inflation as well as exchange rate weaknesses. So if you're an individual or a household and you know that the exchange rate is going to depreciate in coming months, you can access the stablecoin market and exchange stablecoins against the local currency in a few months, which will allow you to maintain your income levels. It's also a very exciting opportunity for cross-border payments, and again, for small and medium-sized enterprises in emerging markets and frontier markets where there is hard currency shortages. This is a way that small businesses can pay their suppliers if they are exporting, or manage their working capital flows. So very, very exciting. And then lastly, remittances. There's a lot of countries, a lot of emerging markets and frontier markets that relies on remittance inflows across the globe: Asia, Latin America, Sub-Saharan Africa. And, stable coins can be used as an alternative to classical commercial banking channels, which is quite expensive. So you have the advantage of very quick transfer of funds and also at a much lower cost. And I think just to mention an interesting stat, World Bank data shows, for instance, that for Sub-Saharan Africa, remittances inflows is larger than foreign direct investment inflows or even official development aid. So it's quite an important source of liquidity, which can come at a cheaper rate and much faster.
So you've made a very good point here. So apparently the adoption of stablecoin is the answer to some of the long-standing issues or questions or practical problems that many people in the emerging markets or frontier markets are facing when it comes to remittances, when it comes to hedging. So, but just like many other digital assets, there is always coming with some risk. So, what is your take on that? What are the key financial stability risk associated with the stablecoin that investors need to be mindful of?
So, Aries, I think the one risk that I would like to highlight is, of course, that we are in uncharted waters at the moment. During the course of 2025, if I have my dates correct, we have seen that the US has introduced new legislation, the Genius Act, which provides some safety net to people that hold stable coins, right? And what this act says, amongst many other things, is that any issuer of a stable coin, an institution or a bank, have to hold safe assets in the forms of cash or maybe treasuries, so that when there is a run on stable coins, and when we talk about a run on stable coins, it's when all depositors or a large pool of depositors withdraw their stable coins and convert it to another currency besides the US dollar, that they have sufficient reserves to supply in this demand. Now, this system has not yet been tested, right? And, we still need to understand if these safe assets that's being held by the issuers of stable coins is liquid enough to really supply in the demand for dollars, or in an event of a run on the stable coin.
Yeah, and actually in many of the discussion about stablecoin with our clients, with other experts, people also usually bring up central bank backed currency, central bank digital currency, CBDC, partly because they're both digital assets and also can be used in cross-border payments. But I just want to take a moment to highlight the fact that they are two different things. The key thing, there are multiple dimensions of the differences between CBDC and stablecoin. I think one of the key thing is CBDC is fully regulated as a legal tender. However, stablecoin is not. and also about the usability and accessibility. CBDC usually restricted to users within a national jurisdiction because primarily the creation of CBDC is intended for improving domestic payments and in support of the monetary policy. However, for stablecoin, it is globally accessible with digital wallets and online exchanges and with very minimal geographical restrictions. And also, as the name is given, CBDC is issued, regulated, and managed by country central banks. But for stablecoin, that is created by private entity such as fintech firms or cryptocurrency platforms, and sometimes governed by decentralized organizations. So I guess CBDC itself is a very it could be a very long discussion. It could be on its own. So probably we will save that for another podcast in the future. I just want to bring it up just, because CBDC might be on some of the audience minds as we were talking about stablecoin. So Thea, let's get back to you. When we talk about stable coins, apart from CBDC, there is another narrative that usually comes hand in hand, which is the global narrative of de-dollarization. So how do stable coins play into that narrative?
Aries, that is a very, very good question. I think really an important question. I just want to highlight that market intelligence. It has been our view that that the US dollar will remain the predominant reserve currency in the future or in the near future, and there's a lot of research that we do on this to explain our view, right? But I do also think that the stable coin will actually deepen the dollar's access or dominance in global financial systems. So I think that will actually cement the dollar and really make it really important in the global financial systems. Yeah. So that is really our view.
All right. So and in addition to the de-dollarization narrative, part of that is the emerging markets and frontier markets. They're, on the other hand, also trying to reduce the reliance on the US dollar when it comes to trade or when it comes to other aspects. So do we see for now, do these markets deploy other spectrums of restructuring or refinancing tactics that would collectively allow them to reduce the reliance on the US dollar?
Yes, Aries, absolutely. Like I said, emerging markets, frontier markets, low-income countries continue to look for ways to be less reliant on the US and on the US dollar. This has been slow and shallow, but still it's ongoing at the background. And I think I would like to explain that by highlighting 3 examples, for instance. And I first want to focus, for instance, on Pakistan, where we have seen where there's been efforts made in debt restructuring and debt refinancing and how they can mitigate their dollar dependence. So Pakistan's power sector had quite a large liability owed to mainland China. I think it was about between 15 and 16 billion US dollars, if I remember correctly. So they approached mainland China and asked for some debt restructuring outside of the classical debt restructuring frameworks or efforts that is available. And mainland China agreed to restructure the debt, maybe start paying at a later period. They also delayed the principal payments, and then they also started looking at the interest rate component at a lower interest rate. But part of the deal was also to repay the interest, not in dollars anymore, but in Chinese yuan. So, they shifted that, that access to hard currency availability, that kind of mitigated that risk for Pakistan, allowing them to pay in yuan. So that's one example. I think other example is Argentina, which had an $18 billion swap line with mainland China. And what Venezuela did was they used the yuan swap line and they accessed the US dollar market to get US dollars and pay their debt owed to the IMF. So in this way, they didn't change the dollar debt servicing in dollars, but they used a different form of liquidity to access the dollars. And then, of course, there's also a lot of frontier markets, emerging markets that access new bond markets like the Panda bond market, which has grown quite significantly. And this is also a way how they try to diverse away from US dollar dominance towards other currencies.
Thanks, Thea. And I remember you also mentioned about how the adoption of stablecoin will impact or deepen, cross-regional trade payment systems in local currencies. So, based on your observation and experience in sub-Saharan Africa, what would be the impact look like?
Yeah, Aries, for quite some time now, a lot of countries in sub-Saharan Africa is trying to develop the African Continental Free Trade Agreement. And this is very important because this is the underlying building block that will ensure sustainable trade and industrialization and benefication within the continent, right? But added to that, they've also created, the Pan-African Payment and Settlement System, PAPS, which allow payments of exports in local currency. It's much cheaper, it is much faster, and it's really there to enhance regional trade. And this systems has started to develop in recent years, and we have more countries signing on to it. I think the really big stumbling block that is determining the pace of PAP's development is the amount of trade that's happening between countries within sub-Saharan Africa. I think as long as, this is quite limited or muted, of course, PAPs will also show limited growth. But then there's also the BRICS cross-border payments initiative, where all the BRICS countries participate in. And similar to PAPS, it's an effort to ensure payment of exports and imports in local currency terms. Again, to make it much faster, to make it much cheaper. And in the end, we'll probably see this development where something like the PAP system will feed into this BRICS cross-border trade system, how these systems integrate. I do, however, think that the stablecoin market and the development of stablecoins will challenge any development of this sort. And I think in the end, it will boil down to regulations, what is allowed and what is not allowed under these trade agreements. Maybe use regulations as a stepping stone to enhance these local currency payment systems. But these things are also, of course, developing at the background at a relatively moderate pace, but still ongoing.
Yeah, but that actually speaks right into one of the other themes that we have been discussing is about on global trade is about the regionalization of trade, where we are seeing clusters of emerging markets, trading a lot more among themselves, not only because of the global tariff landscape, but also because of the increasing purchasing power and the rising middle class of these emerging markets that would become a key growing source of consumers for goods, so to speak. So looking forward over the next 2-3 years, when it comes to cross-border payments or alternative payments landscape, what would be the biggest opportunities and second-order challenges on that front?
So, Aries, I think we did spoke a little bit about the challenges. It's really testing the system and see how robust it is. But I think some of the key developments we're probably watching in the next 2 to 3 years is how these different, digital currencies starts to integrate in classical commercial banking activities, but also, with the new emerging, banking options like, fintech options or mobile phone options, the tokenized deposits. How does it talk with central bank digital currencies, So I do think these integrations of these different options, particularly stable coins, is where we're going to see the biggest growth and development in coming years.
Yeah, I do think, I also agree that, it's going to bring in some seismic shifts on, the banking system in a sense of, they might, because they don't have a lot of, transaction fees coming out from handling cross-border payments, if more of those payments are become digitalized. So, I think the sector needs to find, other new sources of, income as well. So, Tia, thank you so much for your insights today. I'm sure the audience might want to learn more about alternative payments and what should they do?
Well, Iris, we have on our blog page on S&P Global Market Intelligence page. You can find our key themes for 2026, where we discuss some of the key, themes that we think will shape the global economy, both on a political, security, supply chain, financial, landscape. So please feel free to visit that. To visit that platform, but also, of course, very happy to take any emails or find me on LinkedIn. I will definitely respond and put you in contact with the right person to help you with any details or information.
Thank you, Tia. And adding to that, on spglobal.com, there is also a library of research, not only from the Look Forward Council, but also from other divisions across S&P Global. So this is our discussion today about the three key trends in evolving payment landscape in 2026. Thank you so much for joining. Don't forget to subscribe to our podcast on Apple, Spotify, YouTube, and other podcast channels. See you all the next time.